Hi, everybody. Welcome. We're going to give folks just a minute or so to join.
Well, you're not going to get any volume, guys.
Right, as folks join, welcome. We're giving everyone just a couple of minutes to hop in here. And I think everyone's joining in mute as muted, but if not, please mute yourself, at least for the beginning part of this conversation, and then I'll open it up in a little bit. All right, well, I think we have a critical mass here, so why don't we jump in, and I'm sure more will join as we go. But welcome, everybody. Thank you so much for joining us today. My name is George Dyer. I'm the Executive Director of the Intentional Endowments Network, and we're really excited to be having some folks from MSCI with us today. Catie, Chipman, and Bruce Kahn will be sharing some of their latest thinking around some of the issues of net zero portfolios, from definitions to data and carbon accounting in the portfolio. And so we're really excited to dive in and give all of you a chance to ask questions and hear more from them. We're going to start with a brief presentation. And so we ask everyone to stay on mute for that, but we will open it up, and we're in meeting mode today. So we'll be able to just have a conversation, ask questions, and go deeper on some of these topics. And, you know, as the description showed, we'll be focusing on some of the more technical aspects of, you know, carbon accounting in the portfolio around net zero. But as we kick off this initiative and exploration of net zero portfolios, you know, we always want to kind of be consistently bringing the conversation back to the big why of why addressing climate is so important. And particularly how it intersects with our work in the network around equity and racial justice. So just want to mention that as we keep that front of mind as we dive into some of the details around this work on climate. And also to mention, for those of you who aren't aware, this is part of an ongoing series around net zero portfolios, you know, targeted to helping endowments understand what that means and make commitments to net zero portfolios and implement those commitments. So please continue to join us for these as we explore this space. And with that, I think I will hand it over to Catie to dive us in today. Catie?
Yeah, thank you so much, George. I know Bruce and I are very excited to be joining all of you at the Intentional Endowments Network today to talk about some net zero and net zero initiatives. So as you mentioned, that originally the idea is to do kind of a brown bag, and while we can't all be in person and all sitting around a table, we do hope to keep this very interactive. And actually, to kick us off today, we thought we would get everyone going a little bit with some poll questions. So if we could share the first polling question, hopefully we can get a sense of kind of what people are initially starting to think about some of their climate journeys. So hopefully you guys can see the first polling question.
And actually we have a slight glitch. We have 2 people logged into our account and so aren't able to pull in polling right now. So I'll work on that in the background. Apologies for that.
No problem at all. Then I'll share my screen and I'll do the behind the scenes so you guys can get thinking of what we're going to be talking about today. So hopefully all of you can see my screen. And so while we're waiting for the poll to be launched, our first question is, I would categorize my organization's climate change initiatives as A, not actively pursuing climate strategy, B, have taken some initial steps, C, fully developed climate strategy, or D, not interested. And I'm starting to see some results come in. We'll give it another couple of seconds here to see if there's anyone else. I'm seeing some come in, some have a fully developed strategy. It looks like a lot are in this initial bucket. Maybe we'll just give it another 3 or 4 seconds. Okay, great. Well, maybe we'll end this poll. And it looks like just about 70%, and I think you all might be able to see the screen now, but it looks about 70% of you are in the camp of have taken some initial steps in creating a climate strategy, and that's great. So we'll certainly talk about some of that today, and love to hear from you what those initial steps have been. But maybe we'll go to our next polling question. And our next polling question would be, how do you categorize your organization's major challenges around climate? So if you've taken those initial steps, is it A, the communication of the significance of climate to stakeholders? Is it the beginning of the process of evaluating climate? Is it selecting appropriate metrics and targets? Or is it reporting on climate impacts? So we'll give you all a few minutes to answer this set of polling questions. And let's see. Are we all seeing the polling questions?
Catie, I didn't see the second one. The first one popped up again, which I just answered. I don't know if that was just me or for everyone else.
Let's see. Hannah, perhaps our tech guru on the call. Are you able to help us to jump to the second question?
I am still unable to access the polling, but whoever was able to control the first one should see a little drop-down arrow at the top of the launch polling section that lets you choose which poll to launch.
Here we go. All right. Thank you all for your technical help here. You'd think by a year into quarantine, my Zoom skills would be a little bit better here. But I'm starting to see some responses. I'm seeing some communication, some selecting the appropriate metrics. We'll see what else. Lots of responses coming in now. All right, give it just maybe another 20 seconds here. Looks like the majority of you have started to vote. And these ones are coming in all across the board. All right, so just anyone has the final vote, we'll give it the final 10 seconds here, and then we'll share some of these results. Looks like, whereas before on our first question, about 70% of you were in one spot. When I share my results here, it looks like we're pretty distributed, almost evenly distributed across the board. But looks like communication, looks like selecting the appropriate benchmarks, and reporting tend to be, I'll call them the most popular, our hot topics as we think about climate here. So that's great. So we'll walk through a lot of this today and thinking about where we begin and how we go through all of this. So we'll maybe get to our final polling question, and then we'll kick off with some more context, but this is great to see where everyone is. And our final question that we want to ask everyone is, relative to climate, what are you most interested in? Is it where to start? Is it what peers are doing? Is it regulatory reporting? Or is it even broader and on a global trend level? So we'll give everyone a couple of seconds to answer this question here as well. Yeah, not surprisingly, I see a lot coming in about what my peers are doing. I'm like all of you, I always want to know what others are doing. I think it's the gossip in all of us, but always helpful to see what our peers are doing in the industry. Seeing some come in with global trends, a lot of folks with where to start. And maybe again, we'll just do another 15 seconds here or so to get those final responses in. All right, so we can end the polling there. And what looks like about half of you are interested in what peers are doing. So we certainly will get to that. And I think our intent here is to host a series of these brown bag type sessions and focus some of our future ones most specifically on what some exact peer examples are. But in this today, we'll focus on a couple of different ways your peers are looking at some of our data and where to start. About almost a third looking at where to start as well. So certainly some good information. We'll definitely be able to hit a lot of the topics of where to begin, what metrics we want to look at, and really how to start thinking about climate here. So maybe with that, Bruce, I'll turn it over to you, and we can begin to share some of our thoughts and how we approach MSCI net zero and thinking through this, and then we'll bring it back to what all of you your peers are working on.
Great, thanks, Catie. Nice to see everybody this afternoon. Some new friends and some old friends. I see a bunch of folks that have been fellow colleagues in this field for decades now. So great to see you all. Yes, I started at MSCI about in January of this year to work on climate. If you recall, I had headed up with some partners a firm called SICM prior to this, and then was also at Deutsche Bank's Climate Change Advisors back in 2008 to 2012. And we did a lot of work on climate change at that time. And then we have now I've joined MSCI, where, you know, a decade ago we were talking about climate and really talking about it at a high level, directional. MSCI, and through the acquisition of a few firms, really have now put code and data to a lot of what we were talking about a decade ago, and that's really what's exciting. So one of the things I think is important to start with, just to get our heads around what is net zero, why it's important, and not only for us on the call, but for everybody that we all speak with. Sometimes they, you know, climate is one of these, you know, topics that's so big that we don't really, it's not very tractable. But if we go to the next slide, Catie, we see that, you know, throughout really the past 35, almost 40 years now, even 50 years, depending on where you start, you know, we've been looking at climate and greenhouse gas accumulation in the atmosphere and what that portends for an average global warming across the globe. And we've seen these trajectories. So on the left-hand side, you see, you know, the average global warming, you know, very, very minimal through the 1900s into the 2000s. And then we see a trajectory. You know, these charts come from a variety of scientific papers from the IPCC and some of the underlying research there. And we see trajectories that get us to 2 degrees, 3 degrees, 4 degrees, even as high as 5 degrees in terms of global warming. And so on the right-hand side of the chart here is emissions from fossil fuels, and what that portends for global warming. And if you look at the top, you see this term RCP 8.5. It's just the concentration pathway that these industries are representing, and then RCP 6, RCP 4.5, and those RCPs are relative to an average global temperature change. And now in the COVID kind of era, you know, we've all become armchair statisticians, where we all understand, like, we need to flatten the COVID curve in order to get control over the pandemic. And for climate, it's really not any different. Our trajectory for global emissions and global warming is, you know, somewhere between the gray and the blue and the red lines. And we really need to flatten this curve down to the blue line to be within what people call 1.5 degrees Celsius, around there, or sometimes it's called Paris aligned, or sometimes it's called net zero, because we need to be, according to IPCC, we need to be at basically 1.5 degrees by 2050 in global average temperature changes in order to stave off, you know, catastrophic climate change and the physical impacts that will have to our world. And so this scientific basis forms the thought and the framework for how do we actually implement this from an investor perspective. And so lots of frameworks, we can go to the next slide, lots of frameworks have been generated now to talk about net zero and how to implement this idea, right? Whether you're using science-based targets, how do you set a target, and this has been primarily driven by investors and investment communities, but at the end of the day, it's really about corporations and the corporate activity that's going to reduce emissions or provide technologies and businesses and revenues that are going to lead to lower emissions. So, you know, the next slide just shows the IGCC framework, which starts out with, well, in order to set as an investor, in order to set up a net zero target, you first have to kind of come up with what's your governance strategy, how are you going to reference your portfolio? What are you going to do in terms of strategic asset allocation and then tactical asset allocation? What asset selection processes will you put in place? How will that be implemented? How will that be recorded and then recorded and reported? And then finally, you can use this information to guide engagement and policy advocacy. But all, primarily in the first instance is to look at, what we said, also 10 years ago in the divest invest movement, which was the first thing to do is know what you own and then figure out what you want to either divest from and how you would replace it without any changes to forecasted risk and return profiles. So again, like I said, if you go to the next slide, like I said, a lot of this, in the investment industry, so the investment managers or the asset owners, we're really kind of information takers from companies. Companies are at the tip of the spear here, but we have an important and powerful role to influence companies, not only through advocacy and shareholder engagement, but through supply and demand for the securities these companies issue into capital markets. And so what we're starting to track now is, well, how many companies set carbon emission reductions? How credible are those reductions? And then how much are they really getting into not just decarbonization, but actually going net zero? And in fact, MSCI ourselves today announced we're going to be net zero as a corporation by 2040. We're an information technology company. We don't have the highest scope 1 emissions, but we certainly have scope 2 and scope 3 emissions. So, but certain industries have a long way to go to set decarbonization targets and net zero targets. In fact, only 35% of one of our largest indexes, the ACWI, only have some set of targets, even as late as this January 2021. I've been talking about, and a lot of you as well, I know many of you on the phone here, we've been talking about this for 30 years now, and it's like we still only have 35%. It's kind of remarkable. But so endowments, asset owners, asset managers really need to kind of, really bang on the table, because we really don't, according to the scientific basis, we really don't have that many more years to get to net zero, about 30 years. And, that sounds like a long time, but it's really just a flash in the pan in terms of economic history. And so finally, I just wanted to say a few words about, and then we can open up, Catie will talk about a few things, then we'll open up to questions. If you go to the next slide, Catie. So, regulators have been stepping in, and with the task force on climate related financial disclosures coming in, and the SFDR in Europe, and more companies and asset owners and asset managers are getting into TCFD reporting and emissions reductions. It is an important kind of arbinger of what's coming down the pike for asset prices, really, in the end of the day. And in fact, the NGFS, which is a cabal of, I think it's over 150 central banks, are now putting in requirements to look at portfolios and stress test them for policy, regulations, technology, physical risks around climate. And if the central banks are starting to, adjudicate, climate regulation within the investment industry, that's going to require a lot of effort on the part of asset owners and asset managers to adhere and comply with those requirements. And so, that's just kind of an overview of how we're thinking about it. One, we take the climate science very seriously. We know that there are a lot of frameworks and a lot of ways to get to a net zero. We know that the tip of the spear really is the companies, and investment managers, investment owners can really be both carrot and stick here. And the regulators are also going to come in and require companies and the economy to really move forward to lower our overall net global average temperature change. So with that, I'll hand it back to Catie for a few more minutes, and then we can open it up to discussion. I know lots of you will have a lot of questions and discussion points.
Yeah, thanks, Bruce. And thanks for the overview of all things kind of net zero. And in my role as an ESG consultant, my role here at MSCI is to really work with clients like most of you on the line here within endowments and in other sectors, to really work with you guys all to understand how you're using data and how to best kind of think through these sorts of processes. And with net zero, a lot of times the first conversation that I have with folks is, okay, I heard a great presentation on all these great frameworks and all these different ways to think about net zero, but what does that mean for me? How do I actually begin? How do I get my arms around thinking about getting to net zero? And with that, I always say, step one is to come up with your goal. So if your goal is net zero, that's great, but then how do we subdivide that into some more perhaps bite size and tangible metrics along the way? And what we really have started to see over the past is that the initial step in getting your portfolio, getting your arms around your portfolio and thinking about how to make this transition to a net zero type world is with something called carbon footprinting. So understanding your carbon exposure, so looking at your portfolio and having an understanding of your scope 1 or your direct emissions, your scope 2 or those electricity driven emissions, and then your scope 3, kind of that whole value chain and what might come as a result of what you're producing. So having an understanding and developing a baseline of your carbon footprint and understanding your carbon exposure really helps to kind of inform 4 major future actions. And I have the kind of these different boxes on the screen here where you can see oftentimes what we see is a mix of all of these different ways to inform future actions, but really starting and rooting with a deep understanding of where your current portfolio sits in terms of carbon emissions. So one of the ways that I've seen clients initially take a look at bringing carbon into their conversation is with reporting. And so reporting, first and foremost, can be as simple as reporting your carbon footprint. And by doing this, what we find that especially with universities or especially with endowments, that this has been really critical in showing your stakeholders, so whether it's students, faculty, kind of board members, whoever it might be, that you have brought carbon and climate considerations into the conversation. So by reporting, and perhaps it's an annual report or quarterly or whatever you deem as an appropriate metric, that you're thinking about your carbon footprint. And so this is really important to track over time. Not only can you share this disclosure, but then you can start to share how you might be improving or thinking about things like, say, decarbonization. So again, by having a firm understanding of what your baseline is from a carbon emissions standpoint, this can help inform your strategy as you think about decarbonization and perhaps help you to think through if tilting or investing in more green or cleaner revenue companies is the way to go. That might work best for your organization, or if it's something like thinking about a low carbon benchmark, really could help just inform and give you some better background when you develop and think through perhaps beyond that very initial steps in thinking about reducing your carbon footprint. And then I want to talk briefly about when you have this carbon footprint, when you think about how you might want to do engagement, when you can break down your scope 1, your scope 2, your scope 3, you can look at it all. What this might help to do is help inform either your short list or help you get your arms around which companies and which of those underlying companies might be best to start engaging with. And so, like Bruce mentioned, this all comes back to the companies, right? It's all about what they're doing. So how can you as an endowment use your kind of voice to help drive this transition to net zero? And oftentimes what we see in carbon footprinting is you can look at this total level and you can see on a company level, okay, who are our heavy carbon emitters? Or you can start to look at this and slice it a little bit more granular, looking at different sectors and seeing which sectors and maybe within which sectors your heavy carbon emitters are, and really thinking through the carbon emissions process within your underlying portfolio companies. And the final point I'll just touch on briefly here is the risk management angle. And so by understanding and thinking about carbon footprinting, what you can actually start to do is start to think about this from a holistic kind of portfolio construction and building in that risk perspective. And so perhaps with carbon footprinting, with you having an understanding of what your footprint is, as you look at additional managers or as you continue due diligence, this can be part of the conversation here as well, and thinking through asking the questions in your due diligence process of, are you considering what your carbon emissions are? How are you thinking about building these portfolios? So I'll kind of leave it at here as 4 big different ways that you can look at using a carbon footprint to inform some of these future actions, and use this also to talk to your stakeholders and your interested parties. Some of the tools that we've developed at MSCI that really help with understanding your carbon exposure and your carbon footprint, I'm sharing on this page. And on the left-hand side, I'll call this our basic carbon footprint. And what this does is at a portfolio level, we'll call out your scope 1, your scope 2, your scope 3 emissions in a few different capacities. So you can see your carbon emissions, you can see carbon intensity, and you can see your weighted average carbon intensity. So each of these metrics does capture what carbon emissions are, but through a slightly different lens. So if you want to look at absolute tons of metric tons of carbon, or if you want to look at, say, your heaviest carbon exposures. And then on the right-hand side of the page, we get to our carbon footprinting really 2.0. And this dives down within the portfolio to be more granular and to look at different sectors, to see where your carbon emissions are, to see who your heavy hitters are. And what I find with these is that this is a really great way for folks like you all on the line. If you're looking for where do I start, right? What do I do? How do I understand all this? That some of these are really great ways to say, okay, what's our carbon footprint? Where is most of this coming from? And then how do we want to inform our strategy for dealing with this from there? So I'll kind of pause here. These are some of the ways and some of the tools that we've been sharing with clients to help capture that carbon footprint so they can inform their future strategies. And then I'll give you all a little bit of a preview for future sessions that we might be able to do. And here we have some more of our forward-looking metrics when we look at what a climate risk report might look like and what different climate value at risk might look like. So, once you go past carbon footprinting and understanding what's currently happening, looking at that future state is kind of our next wave and our next step there. But with that, Bruce and I have been talking. I'll pause here. Would love to hear what you all have been doing, any initial feedback or thoughts you have, questions you have. Perhaps you've all started your carbon transitions or your carbon journeys in an interesting or creative way that you'd love to share. Any questions or feedback, we'd love to open the discussion to all of you.
Excellent. Thank you so much, Catie and Bruce. And yeah, I think if people are comfortable and would like to go ahead and turn video on. We don't have a huge group, but we probably should raise hands if you want to ask your question out loud. And while folks think, there's a great question right off the bat from Mark in the chat around how you all are thinking about scope 3 within the net zero framework, which I know is a tricky one and an important one right off the bat. So I'm going to see how I approach that.
Yeah, I'm good. So yeah, I was just typing out. Hi, Mark. Thanks for the question. So we do have an estimation model for scope 3 on a per company basis. We've developed our own estimation model rather than using reported, but we do think that that's going to continue to evolve in not only in our model, but also in reporting of companies as they become more serious about decarbonization. It is tricky because scope 3 is that, is that kind of emissions that are kind of beyond the frontier of the company's boundaries, if you will. But companies have been thinking about it. They want to reduce their scope 3 emissions, and they may have to find ways of offsetting that, to get to net zero. But it's going to be a challenge for sure. I'd be interested to hear what you have to think about, have to say about it.
Yeah, I guess the question really is, even before you get to a specific company and what its specific goals are, and certainly companies trying to reduce their scope 3 emissions is, and both sides of scope 3, right? Because they're very different kinds of questions. It's important for companies to be thinking about that. But as a framework, the notion of net zero, how much is expected on the scope 3 front to be able to claim net zero? I have a real concern about the rhetoric around net zero, and is there going to be a shared universal understanding of what net zero means? Or is it going to be sort of the Wild West of definitions, sort of like fossil fuel free has been?
Yeah, dude, I definitely share. I and we at MSCI definitely share your concern, and it is kind of one of these terms that can get bandied about. But I think everybody kind of like within within our community, if you will, kind of have an idea of what that means, and know that this is all aspirational. But you have to set out a target even to start to work towards it. Now, outside of our community, where, like you said, fossil fuel free can get bandied about and twisted, I think that is a real concern, and we have to stay in front of that as an industry, and as a part of the investment industry, and as part of corporate management. And so one of the efforts MSCI is making is we're working now with a lot of corporates also to be doing their own carbon footprinting, scopes 1 through 3, as well as benchmarking other firms. So we as an industry have to stay in top and stay in front of it and stay in control of that rhetoric. I wholly agree with you that it's going to be a challenge if we don't control it.
And maybe I'll jump in too to add, I think one of the biggest challenges with carbon emission across the board and looking at scope 1, scope 2, scope 3 is really the inconsistency in data reporting. So even with scope 1 and 2, majority of companies are not reporting their emissions, or they're not reporting it on a consistent basis. So 2018 they might, 2019 they might not, who's to say what they're going to do for the following years. So I think it's really trying to figure out what this consistency looks like. And as there's different trends growing and the regulatory environment becomes a little bit stronger, I think exactly, Mark, what you're talking about is making sure that net zero doesn't become the new greenwashing type term. And, when we look at some of the sustainable finance trends coming out of Europe and how do they need to be branding appropriately for green or sustainable investing type funds, I think this is something that the industry is looking at more and more of, okay, how do we make sure that we have the appropriate titles and things like that in place? So, I would expect likely in time, this will also happen within the carbon kind of community.
Yeah, and George, this might be something that you take up because, it's easy for MSCI, who's got a data solution for climate, to talk about how important it is. But if like big endowments or even middle and small size endowments start to define the space, that's going to lead a lot further down the road than if like firms like us or asset managers. If the asset owners define what it's going to be, and that's it, then I think we'll be in better shape.
It looks like Keith has his hand raised. I don't know if Keith, you want to come off mute?
Yeah, I have a very basic question, and that's for an endowment. How should they think about how do you define and apply scope 1, 2, and 3 emissions to an endowment fund?
You want to take that, Catie?
Yeah, so I was going to say, first and foremost, when we're looking here, what we're looking at is mostly the public space that we're capturing the scope 1, scope 2, and scope 3 emissions for. Obviously, with endowments that invest quite heavily in the private space, this is something that is very topical in the industry right now. And how do we get our arms around capturing carbon emissions within your private equity portfolios or real estate, et cetera. And to go along with that, actually, MSCI right now is working on a partnership with Burgess to really figure out what is the appropriate way to capture this kind of carbon footprints, carbon emissions. A lot of the endowments that I've worked with and I've seen to take a stab at this have really started with, let me look at my carbon footprint. Let's do it for what we have available. Let's disclose where we're at. And really just share that this is what we can do. This is where the data enables us to share right now, and then to keep this as an iterative process going forward. So a lot of the carbon reports that I see tend to cover the available spectrum right now, and obviously we'll continue to adapt as time changes.
And Keith, we've also worked with several of the large endowments out there, and in partnership with them, in collaboration, develop good proxies for asset classes that we don't have explicit coverage for. And as long as the endowment themselves are part of that process and agree that the attributes of the proxy match the attributes of their underlying assets, even if they won't disclose those underlying assets to us, by definition, those private markets are private for that very reason, then as long as they're happy with it, we can run those models and give them estimates. And then it's going to be up to them to kind of caveat it as estimates and, you know, fill it with stuff that guys like you are going to help them write up the disclaimers and because, you know, nobody wants to be construed as doing anything that's outside of the realm of fiduciary duty. Oh, sorry, Keith, you're on mute. But because I think what one of the things that you're driving towards is like, if people do all this, like, you know, one, can they get the right data? Can they get good estimates for what they have? But then, is it still in alignment with fiduciary duty? That's, I think, always a big question.
Yeah, thanks. That covers it. Appreciate it.
Sure. Louise, I think, has a question.
Great, thanks. Hopefully you can hear me. I'm curious in terms of those parties that are taking the net zero commitments, you know, getting the carbon out of their portfolio is, you know, clearly a first very important step. But how about on an ongoing basis? Investing in climate solutions. How are climate advisors like yourself helping your clients to address, you know, the opportunities to invest in a better kind of climate future? And then a second question would be, you know, we're always talking about getting the carbon out of our portfolios, but, you know, there are several greenhouse gases that are much more toxic than CO2, and just curious about your public tracking of such data, whether that's NO2 or SO2. How are you taking that into your thinking and advisory?
Catie, I can jump on the second part, which is, so when we do our estimations, we are looking at CO2 and equivalent. So we look at the equivalent, which includes the nitrous oxides and the sulfur dioxides and the like. But I think it kind of goes back to Mark's question, really, which is like, there's so much carbon embedded across everything that how would you ever get it all out, as well as all the other gases that you're referring to, and as well as aerosols, you know, because, you know, aerosols isn't necessarily something that comes from fossil fuels. It comes from all kinds of other industries. So how do you take that into consideration? So we've done some analysis on that, and what we have found, though, is that, and as you might have all expected, that's really kind of a barbell. Like there's a lot over on one side, a set of industries that have the majority of the emissions, including CO2e. And then on the other side, there are a few industries that have really low carbon kind of and CO2e kind of emission profiles. But somewhere in the middle ground of the spectrum of different industries, it tends to be de minimis, and from an investment perspective. So it's not that it's zero, it's just not as large as the two barbells. So we are thinking about that. We are thinking about the other gases in our modeling. And, you know, it goes back to knowing what you own. You got to, you know, it is the painstaking job of any asset owner, asset manager to walk through every security that they have in their portfolio and understand what it is. And believe it or not, most don't do that. Some do, but our experience has been like, you know, and we've all been on these calls, right? Tell me about the top 10 holdings. Yeah, but what about the other 90 holdings? You know, so.
And maybe even, you know, Bruce, to further that point, and maybe to address part of your first question, Luis, is knowing what you own is so important, and then knowing what you own and what they're doing on a forward-looking basis as it relates to carbon is equally as important in considering kind of climate risks in a portfolio. And so I think a lot of what we do, and a lot of clients that I work with, it's not just understanding your carbon footprint, it's using that as your true baseline, and then saying, okay, what do I see as my heaviest emission sectors? And then looking across that and saying, okay, are there leaders and laggards, and how do I parse out who might be positioning themselves best for a transition to a low carbon economy? Are they making the appropriate adjustments today, whether it's in their business model, so they don't wind up with large costs as regulations change down the line? So, it's looking at things like patents. It's looking at things like where are companies located? Where are their facilities? Do they have exposure to is coastal flooding going to be a big part of their forward-looking operation ability? And really starting to build out and look at kind of this future-looking state and something we call climate value at risk, and really seeing what the dollar impact on these companies might be. So certainly carbon footprinting is important to establish the baseline, but that's establishing your baseline and looking forward with all of these companies and kind of digging into your underlying holdings to see where they might be going, or thinking about this sort of transition to a low carbon economy.
Great. Thanks, Catie. Hey, Hugh, how are you?
Hi, good. Thanks, Bruce. Thanks, guys. I was just actually going to add to the question before, just one not-for-profit that we've been using called the Project Drawdown has been quite good. We've been sort of trying to map our portfolios to the carbon sort of solutions that they've got on their website. There's around 80, I think there's 83 solutions that are going to help us get to that 1.5. So I just wanted to add that. It's a really good not-for-profit free source if anyone's looking for solutions.
The book on my shelf, it's quite a tome, and there's so much information in there. That group has done a lot of work over the years. Sunil.
Thanks for doing this. Maybe one sort of question / comment. So just a quick background. I'm Sunil. I'm at the University of Pennsylvania in Philadelphia. After thinking about it for the last 6 months, we just made the net zero commitment 2 weeks ago. And I guess one thing, as we start thinking about how do we actually do this aspirational goal, I think one thing we're quickly running to is how do we have confidence and in the quality of the emissions estimates, I think certainly we've gone through, and like Catie mentioned, a lot of people in our position have gone through an initial carbon footprinting exercise. By the way, we use MSCI as our one vendor in this area, so it's been incredibly helpful to have you guys alongside us this journey. But I think as we've kind of gone through this carbon footprinting exercise, the research and studies we've looked at is like there is I think there is some work to suggest that when you compare actual versus emissions data, I think there can be significant discrepancies. And so today, I think when we look at the results of the footprinting exercise, I think we can use them directionally. But today, at least us personally, have trouble putting a lot of weight into the absolute numbers in terms of the footprint of a portfolio. And I just sort of share that as today that's an area where that's where we are today, and both maybe a question and a thought for a follow-up workshop that would go into would be clearly a bit more detail than this is, helping investors understand, a company when it does a good carbon reporting, what is the steps in the exercise. And I think if investors can begin to understand exactly how carbon measurement works or emissions measurement works, then they can be informed when they're getting different estimates from different companies, from different managers. They'll be able to start attaching different levels of confidence and conviction in different numbers. So sorry, that was long-winded and sort of semi-comment, semi-question, but that's one thing we're sort of thinking through in real time. In terms of where we are today.
It's a crucial question because, we want to make sure that this is as best as science can do. And we know that it's not an easy, even scope 1 is not, it's more straightforward than scope 3, but scope 2 is easy because it's just your electric bill, right? And we got that. But scope 1 can be more difficult. And maybe, George, that's the topic of another brown bag, which is what are the estimation models for emissions? Because it looks like we're running out of time now. We have ours. We've done a lot of academic, testing our model against some of the academic work done out there. There are other people who are doing the estimation models. back in the day when I worked for an engineering firm, we used to actually do this for companies. And that's evolved quite a bit over the past decade, but it's still not a perfect science. But it's getting better. And we think our model is directionally correct. It's within a confidence interval that we're comfortable with. And hopefully that's going to continue to get better. So maybe that's the topic of another seminar, George, to like go through like the kind of details of how do you create an estimation model. Because maybe we'll even get a corporate to come on, like the head of carbon emissions estimates for a corporate who reports it. Because they're again, we're all in the investment industry, right? The tip of the spear is the companies. What are their activities? We can't do any better than what they're doing, right? With what the data they give us.
Sunil, I would just add, you're certainly not alone. This is definitely a hot topic. Everyone is trying to figure out, okay, this is great. And as you said, directionally, this has been really good. But then where's that next level? And the estimation model and what's the difference or variances there? So yeah, certainly.
I will add one more thing, Catie. Sorry to interrupt, which is like, I don't think we should let precision get in the way of action. Like, right? Yeah, we're never going to get it perfect, but we got to do something. Yeah. We don't really have that much time. So even if directionally is what we got today, we got to do it because it's like
I think ultimately. Yeah, sorry, I think ultimately that's why we got comfortable making the pledge that like today we don't need a very sophisticated model to know energy, the fossil fuel drain is something globally, societal wise, we need to figure out, right? And that's clearly going to be a big driver of emissions. I mean, to figure that out, I think we don't need a very specific model to tell us that. So I think fully agree with that. And again, we'll once again sort of thank MSCI. I think it's been really helpful to have you guys as partners as we sort of think through the process.
Great, thanks for your partnership.
And as someone noted, we did build this as 45 minutes, so we're a bit past, and certainly understand if people need to drop off or are feeling Zoom fatigue. But Bruce and Catie, if you guys would indulge me, just one last quick question for those who do want to stick around. I'm just curious, particularly for some of like the smaller and mid-sized endowments that might be thinking about this, you do just say a little bit about like how heavy a lift this is to undergo a carbon footprinting process and get that directional, sense. Are we talking weeks, months? A lot of money, affordable? What's sort of a ballpark of what the process looks like if they were to jump into this?
Yeah, I think I'll start and Bruce chime in, but I think the process really starts with, what is your portfolio? And a little bit to some of the questions we got earlier, while there's some imperfect parts of carbon footprinting, and while we might not have specifics for all the sorts of private markets, beginning with what you have, and I'm sure all of you have a very clear understanding of what's in your portfolio and the different managers, but then utilizing different tools, whether it's MSCI, I think they certainly help alleviate the lift. I don't necessarily know that it's a huge arduous process when you have the data and you have some of those data factors feeding in. So I definitely think it can be streamlined and without being too much. I think the harder part is deciding your goals and how you want to disclose that to your stakeholders and kind of getting yourselves organized around how you might want to share this with your stakeholders.
Great, thank you. All right, well, thank you all again. Unless there are any last minute questions, I think we can go ahead and wrap up. And please do be in touch if you want to connect with Catie and Bruce. I'm sure they'd be happy to follow up. And again, if you've got interest in staying involved in these conversations, please be in touch with me around our Net Zero Endowments Initiative. We'll be continuing these conversations and going deeper on different elements of all of this. So hope to have you all along for those conversations. And until then, have a great afternoon.
Thanks, everybody.
Thanks, guys.
George. Thanks, Bruce.